It's probably a good time now to talk a little bit about our due diligence or investment process. And I know we talked about what the credit managers themselves look at in their process. If you look on the slide here, I'm not going to talk directly to 4Ps as you see them on the screen: people, process, pedigree, and performance. I'm sure that when we send you the presentation a little bit later, you can read through all of those segments. But what I really wanted to focus on today is the three key areas that we always look at in our due diligence review. And those three areas are credit, legals, and experience, or what we like to call battle scars. Firstly, in this process, we look at prospective investments credit process, and this is from our perspective a key to what we look at, but it's really only the first building block of our review. If you can't assess credit quality specifically of your borrowers correctly, then you shouldn't be running a lending business in the first place. As I said, though, it's only really our first level of due diligence. And more importantly, what we need to understand is the team and the lending businesses' legal ability and their legal documentation. We need to make sure that once a loan has been made to a borrower, if something goes wrong, and let's not kid, things always have a funny habit of going wrong, then in that situation, the lender needs to have a really strong legal ability to step on the underlying collateral and secure it to ensure there's no loss of capital. The collateral could be property, some other kind of real asset, or even contractual cash flows. At the end of the day, though, we need to satisfy ourselves that our lender's legal documentation is strong enough to protect them in the situation of a failure. Finally, it's really important that the lender's team and their experience, they have this ability to deal with tough situations. There's no point in having the best credit. There's no point in having the best legals in the world if your team just doesn't have the gumption or the capability to deal with a tough situation or a default situation. And let's not kid, not everyone's made to deal with that. Certainly, the credit managers that we look at are pretty tough individuals. So we always say that we want our managers to be highly experienced. We like it when they've been through bad experiences. And in fact, if they haven't seen bad debts or defaults on deals in the past, we typically don't actually want to invest with them. We like them to demonstrate what they've seen in these previous transactions to us. That we like it when they talk us through what they've learned and the actions they've taken in protecting their loans. So in short, what we want to see is their battle scars. And with all three of these things in place, so credit, legals, and battle scars, we generally will get comfort to proceed on an investment. On an ongoing basis, we definitely look across our portfolios we look to build deep relationships with the different loan platforms that we invest into, and importantly, we maintain a regular program of review on their operations.